When that momentum and when the narrative is established, as we said before, I suspect that the move in front of us will be much greater. And my experience has been over 49 years that the markets, when I say markets, I mean precious metals markets, are led by silver, by gold, pardon me. But when that momentum and when the narrative is established, as we said before, silver moves further and it moves faster.
In the video, Rick Rule underscores silver's prominence in the precious metals market, stressing that once momentum kicks in, silver outpaces and extends beyond gold. At the 36-second mark, Rick delves into his perspective, revealing a significant commitment, around 2.5% of his substantial net worth, dedicated to speculating on silver and silver stocks. Tune in to gain valuable insights into his strategic approach and optimistic position on the silver market.
I'm interested in silver precisely because it's disappointed people. I'm interested in silver precisely because your audience, who probably had some expectations around the year 2020 around silver, was disappointed. I'm interested in silver because it's unpopular, it's out of favor, and it's regarded as dead in the water. Obviously, buying things when they're hated and enjoying the arbitrage from hated to unhated is the easiest money that's made in speculative markets. And the fact that from a speculative point of view, silver is dead in the water, and from the point of view that it has disaffected so many people who were attracted to it in 2020 and 2021 is precisely the reason why I'm attracted to it. Why silver? Silver is the most volatile, I would suggest, of the precious metals. I'm defining the precious metals to be gold, silver, platinum, and palladium. Silver traditionally is a second half mover, meaning in precious metals bull markets, the markets are generally led by gold. Once the trend is established and the narrative is established, silver, for whatever reason, and I'm not sure of the reason, perhaps the lower unit cost, moves further and moves faster than gold. My first attraction to silver, of course, came in the decade of the 1970s. The cause for that attention was the fact that the silver price moved from, if my memory serves me well, $1.20 to $50, which was certainly a dramatic move. I'm not trying to say that I caught the bottom or that I caught the top, but I caught enough of the middle that it attracted my attention and has for the rest of my life. And as dramatic as the moves in silver are, the moves in the silver stocks, possibly because the population of them is so few, is even more extravagant. During that period, the 1970s, one silver stock, Coeur d'Alene Mines, moved from 10 cents to $65. Alas, sadly, without me. But that's okay. Others did fine with it. So I would say that there are, from a fundamental point of view, a couple reasons to be interested in silver and silver stocks. But you have to be, I would suggest, first of all, a speculator. And you have to be, I would suggest, a contrarian. The easy money will be made in silver and the silver stocks simply from the arbitrage between hated and disgusted and unhated, just as we saw in the uranium stocks. The easy money in the uranium juniors happened as a consequence of them becoming simply less hated. And that will happen with silver, too. Silver is unique, I think, in ways that your listeners need to understand when they're trying to comprehend silver. First of all, most silver doesn't come out of silver mines. So the supply side is a really interesting conundrum. Of new mine supply, last year, I believe 18% of the new mine supply of silver came from silver mines. The rest came from copper mines, gold mines, and lead and zinc mines. So trying to forecast mine production based on the silver price is a fool's errand.
Rick Rule argues that attempting to predict mine production based on silver prices is a futile endeavor. He points out that gold, copper, lead, and zinc prices have more significant impacts on silver production than the silver price itself. Equating mining costs specifically to primary producers is illusory because these costs only apply to 18% of mined production. Since most silver is a byproduct or co-product, The mining process mainly involves processing the silver stream, with costs covered by other metals. This means that the primary cost of producing silver is often lower than commonly perceived. Rule further notes that as the silver price increases, the supply also rises due to two often overlooked factors. First, recycling becomes more efficient at higher silver prices, especially compared to low silver prices. The easiest silver to access is the recycled silver resulting from industrial utilization. Second, substantial above-ground stockpiles of silver exist, representing a large and somewhat mysterious reservoir. Despite this, silver continues to function as a store of value, particularly off official balance sheets, especially in South Asia, where silver tends to be preserved and traded strategically, influenced by both silver prices and currency fluctuations.
Because gold prices and copper prices and lead prices and zinc prices are more important to silver production than silver prices are. And equating mining costs around primary producers is an illusion too, because those costs only pertain to 18% of mined production. Most silver, as a consequence of it being a byproduct or a co-product, requires, from a mining standpoint, only the processing of the silver stream. The costs are paid for by other metals. So the primary cost of production of silver is often less than people think it is. And as the price of silver rises, the supply rises for two reasons that most people don't consider. The first is recycling. At low silver prices, it is less efficient to recycle. At higher silver prices, it's more efficient to recycle. And the easiest silver to grab is the silver that's already been mined, that is recycled as a consequence of industrial utilization. The second is that the above ground stockpiles of silver are large and almost unknowably large. Silver still represents a store of value, if you will, off official balance sheets, particularly in South Asia, in India, Bangladesh, Pakistan, Sri Lanka. And what you'll find is that when the silver price moves up in US dollar terms, particularly when the US dollar moves up relative to South Asian currencies, that South Asian people tend to dishoard their silver, which is to say they tend to be better silver investors than Americans. They tend to buy it low and sell it high, unlike us, who tend to buy it high and, of course, sell it low. So the supply of silver is very difficult to understand. The demand side can be similarly difficult, although it's important to note that right now at these silver prices, there is a supply deficit, which is to say the amount of silver produced in all sectors, primary production, co-production, and recycling, is substantially less than global consumption for fabrication. I suspect that the move in front of us will be much greater. And my experience has been over 49 years that the markets, when I say markets, I mean precious metals markets, are led by silver, by gold, pardon me. But when that momentum and when the narrative is established, as we said before, silver moves further and it moves faster. And the silver stocks move the farthest of all. From my own perspective, I'm likely to have a fairly de minimis part of what is a fairly large net worth involved in speculating in silver and silver stocks. I suspect something like 2.5% of my portfolio will be, by the end of 2023, involved in the silver trade. One of two things could happen. I could bore myself to tears, which I'm okay with. Boredom, I think, is high praise. Or I could be wrong, and I could lose maybe 50% of 2.5% of my net worth. Or I could be right, and I could enjoy a triple in the metal, and a 10-bagger or so in the stocks. Make no mistake, if past is prologue and the gold price were to triple, the silver price, if history is our guide, would do better than triple. And the silver stocks would, in certain cases at least, the better ones, give you the type of performance that the better ones, the better speculative ones, have given me in the past. And those are very handsome returns indeed. It wouldn't surprise me to see a 2.5% allocation of my portfolio become 20% of my net worth, juxtaposed to, if I'm wrong, seeing 2.5% of my portfolio become 1 or 1.5% of my portfolio. The juxtaposition of the upside to the downside is so spectacular that I can't help myself. Do I know when it's going to occur? Of course not. I don't even know if it's going to occur. What I do know is that the competition to put those positions on from other speculators is non-existent. And I love circumstances where an asset class that I would like to own is one where I enjoy no competition on the bid, which I hope describes to you the silver case from a historic point of view.
In this video, Rick Rule sheds light on silver's dominance within the precious metals market, underscoring how, once momentum takes hold, silver outpaces and extends beyond gold. Offering his perspective, Rick discloses a significant commitment, comprising approximately 22% of his substantial net worth, dedicated to speculating on silver and silver stocks. Tune in to glean insights into his strategic approach and optimistic stance on the silver market, accompanied by a musical backdrop. If you found this information helpful, feel free to subscribe, like, and share the video with your friends and family. For any questions or contributions, drop them in the comment section below. If you're eager for more financial advice, check out the next video that pops up.